Alright, so this is chapter 16, and if you remember where we left off, we were talking about different types of cost systems. And so we had, in chapter 15, we talked about job costing, where that's when we had a situation or a business that had, custom orders or products that you could easily identify that they were different. That's going to usually be kind of a low production stuff, lots of customization, lots of flexibility. I think one of the examples we used was a car repair shop, and so every car that comes in, it's a very custom repair that they're doing to each one of those. And so what we're going to go into in chapter 16 is a process costing system. So that's going to be something where you can't identify the individual units. This might be like milk production. You're making M&Ms. Something where when you make an M&Ms, you don't know exactly how much chocolate goes into each one of them, and so it's going to be more of a process or a continuous flow type thing. And so usually the bigger a business gets, the more units you're producing, the more apt you're to go to a process cost system. And so kind of what that looks like is so here's kind of a quick look on how the flow of these goes. So if you have a job order or job costing system, you have your direct materials, your direct labor, and your overhead, and then as you have the job, you apply it to the job. That job goes to finished goods, and then the cost for each job. Process costing is you're not looking at things as a unit by unit or job by job. You're looking at more of a process. So if you have, you're making, the M&Ms, you have, your mix, process 1 might be mixing the chocolate. Process 2 might be, the candy coating. So you're not looking at individual units as you apply cost, but you're applying cost to like process 1, process 2. And so what we're going to start looking at is we still want to know a cost per unit. That's important. And so we're going to talk about this thing called equivalent units. And so we'll kind of get into that. So let's go ahead and start working on problem 16-1. And in problem 16-1, so we have Sierra Company manufactures woven blankets and accounts for the products using the process cost system. The company uses only a single department, and then it starts giving us some information. So we have our inventory balances, beginning and ending, and then we have some transactions that happen during the month. And so the first thing it's going to ask us to do is to compute so let's see, the products transferred from production to finished goods, and also the goods sold. So we'll go over here, and so we'll start off with plugging in the beginning work in process inventory, and so that gives us right here at 435,000. Then we want to add in the direct materials that we used, and so down here during the month we added 157,500, and then we want to know how much labor we added, so we added 780,000. And so now we want to apply the overhead during the month, and it tells us that we're applying overhead at a rate of 115% of direct labor costs. So to do that, we can just take our direct labor cost and multiply that times 1.15. So that means the total production costs, what we started with plus what we added, was 2.2695. And so to figure out what we transferred to finished goods, we need to take out what's still in process, and that's going to be our ending inventory balance of 515,000. So that we transferred out of work in process to finished goods are 1.7545. And so now we want to calculate our cost of goods sold. So we'll start with our beginning balance in cost of goods sold, beginning balance in finished goods. That was going to be our 633 plus what we transferred in. So we just calculated that. That's going to give us our total goods available to sell. And then if we subtract out our ending inventory, we'll know what our cost of goods sold is. So our ending balance was 605. So that means we have cost of goods sold of 1,782,500. So that is part one, and so part two wants us to go ahead and do some journal entries, and so it gives us different ones. So we have A, raw material purchases, direct material purchases, and direct materials, and so on. And so we'll just start going through these journal entries. All right, so the first one is our raw materials purchased. And so we purchased raw materials on credit of 250,000. So we increase raw materials inventory and increase our accounts payable. So then we want to figure out our direct materials used. And so that is what we added to direct materials over here at the 157,500. So that goes into work in process and out of raw materials. The next we want to figure out the indirect materials used. And so the indirect materials is over here at 60,000. So same idea. And then next we want to figure out what our direct labor costs were. And so the direct labor cost was 780,000. And then we want our indirect labor costs. They give us that at 750. Alright, then we have to pay our payroll. Let's see that. Okay, there we go. Oh, so factory payroll, paid in cash of 1.530. And then we want to incur our other overhead costs. And so that's going to be 87,000. Now we want to figure out how much overhead was applied, and we already calculated that up here at the 897. Now we want to transfer the goods that we finished from work in process to finished goods, and we calculated that up here at the 1754,500. Then we want to book our sales, and so sales were on credit for $2.5 million. And then whenever we book our sales, we want to book the cost of goods sold that was related to that, and so we calculated that up here at 1782,500. So a pretty simple, straightforward problem, and so I think that answers all of our questions. Oh, so we got a check figure here of our cost of goods sold. Better make sure we're right here. 1782,500. Yep, got it. Looks like we are all set.